The rising cost of long-term care could potentially upend even the most solid retirement plan. In the U.S. today, annual long-term care cost in a nursing home averages over $83,000 and is rising at a rate that exceeds annual inflation. So if you are currently 60 years old and have a long-term care need in your 80s, you may be looking at an annual cost of $181,000. Long-term care doesn't just mean care in a nursing home. Home health care services can currently cost an average of $21 an hour. Now you may be thinking, that could never happen to me. I'm healthy and I take really good care of myself. And you may be right. But 7 out of 10 Americans aged 65 and older will need some type of long-term care. According to the U.S. Department of Health and Human Services, the average length of stay in a nursing home is 2.4 years. What will your retirement nest egg look like if you or your spouse needs long-term care services for an extended period? How are you planning to protect the assets you have worked so hard to build? Using your own retirement assets or self-insuring puts your personal funds at risk. Even so, some people like the idea of self-insuring because they want to maintain control of their assets, and they don't want any restrictions on when or how they can use their own money. But even those with significant amounts of money could see their assets erode should they need long-term care. If you hope to rely on government programs such as Medicare or Medicaid, you may be surprised to learn that these programs may not entirely cover the services you want or need. Typically, Medicare only covers medically necessary services, which may or may not include long-term care support. There are also many limitations on the types and frequency of services, as well as deductibles and copays. Medicaid coverage is generally only available to specific low-income individuals and families that meet eligibility requirements that vary by state. Traditional long-term care insurance has been the primary option for private long-term care planning for many years. With traditional long-term care insurance, the insurance stays in force as long as premiums are paid. And then, when the benefits are triggered, the policy pays up to its coverage limits for the long-term care services needed. In fact, your premium payments may rise as you get older. But what happens to all that premium you paid into the policy if you never need long-term care? Some long-term care insurance carriers refund some of the premiums upon death. However, many do not. With traditional long-term care insurance, there is a risk that you might pay for long-term care insurance that is never needed or that becomes too expensive just when it is needed most. There is another option: single premium life insurance. Some single premium life insurance policies with long-term care benefits offer you protection from the risks of long-term care expenses, a tax-free guaranteed death benefit for your beneficiaries, and a money-back guarantee if you ever decide you don't need the policy. Maybe most importantly, single premium life insurance products offer an alternative to the use it or lose it problem associated with many traditional long-term care insurance policies. Let's use a hypothetical case study to show how one premium payment of $100,000 immediately increases the funds available to help pay for qualified long-term care services. Linda Johnson is 60 years old, in good health, and has $1 million in retirement assets. Let's redirect $100,000 from the portion of her $1 million that has the lowest earning potential, is the least taxable, and the most liquid, and reposition it into a single premium life insurance policy that offers a rider that will guarantee a full return of premium. From day one, Linda's $100,000 premium could secure a monthly benefit of about $7,000 for a total long-term care benefit of nearly $500,000 paid over a 6-year period. That is a potential benefit of almost 5 times the amount of her one-time $100,000 premium. What happens if Linda dies and never uses any of the long-term care benefits? The policy would pay her beneficiaries a tax-free death benefit of approximately $165,000, less any withdrawals or loans. If Linda does begin receiving long-term care benefits from the policy before she passes away, her beneficiaries will receive any remaining death benefit income tax-free. Several single premium life insurance policies offer what's called a residual death benefit, meaning the beneficiaries will never receive less than 10% of the initial death benefit amount. So for Linda's beneficiaries, they know they will never receive less than $16,500, regardless of how much Linda received in long-term care benefit payments. Let's say Linda decides that she no longer needs or wants the policy. She can surrender the policy at any time for her original $100,000 initial premium, less any withdrawals, loans, or previously paid long-term care benefits. If Linda never takes any funds out of the policy, she can potentially walk away with her full $100,000, no questions asked. Obtaining a single premium life insurance policy is a streamlined process. Generally, the only requirement is a telephone interview with the insurance company, where they will ask you a predetermined series of health questions. That means no needles, no trips to the doctor or lab, and no waiting for weeks and weeks for an underwriting decision. With single premium life insurance, the turnaround time for an approval is typically a week or less. Single premium life insurance can help you defend your retirement and offers you the opportunity to leverage a portion of your assets for multiple benefits, including both generational wealth transfer and long-term care protection, both on a tax-favored basis. It is important that you discuss your financial objectives and goals with your advisor or insurance agent to determine if a single premium life insurance policy is right for you. There are many products on the market today that offer similar benefits with some slight variations that may be more suited for your needs. Whichever product you select, single premium life insurance can help ensure that you have the protection, flexibility, and liquidity you need right when you need it the most.